Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's January 23rd. We got no economic news release to go over today, so we'll jump right over to the headline news. Stock market has been kind of funny. It's been kind of in a seesaw moment. As soon as I did this, it was up, but since then, Dow has been negative, and a lot of it's been going on a seesaw. We've had good earnings reports coming out with like Netflix and a bunch of others came out. So that was all good. Government shutdown finished as of last night. But the thing we have to watch for is only 3 weeks. So February 8th is when we go back to where we were again. So we'll have to see if there's another government shutdown. So it's not out of the woods yet. Also, we got today starting today is the World Economic Forum. A lot of eyes will be on that to see what they think. The IMF recently updated their outlook for the economy and figured on a global level it was going to improve, which they figured out of Europe and Japan. They see a lot of improvement from there. So they revised their outlook for economy. But they'll be taking a look to see what the central bankers and them from around the world and world leaders that would be there, what they have to say about globalization and how things gonna what their outlook is going forward here. So here's a bond market. Bond market's in a little better position today. We've been fighting this floor of support here. As you see, we closed below it. Today we're up. Right now we're up currently about 17 basis points. We have been fluctuating a little bit this morning, where we were down a lot further, and then we have since pulled up. We're currently about 17 basis points from where we left off yesterday, which translates to better pricing so far this morning. But we could be seeing a little seesaw action as we've been seeing the stock market. Mortgage-backed securities been seeing the same thing. So we could see some price changes with this volatility today as well. And of course, it depends where we leave off today. If it gets kind of late in the day and it's worse than where we were, that you might see some pricing for the worse as a result. So be a little cautious here. Now, why is there some improvement? Treasuries. Treasuries are down on a global level, and right now we're down below this first level resistance, which is good for stocks and bonds or mortgage-backed securities. And it's bringing us down to about the 2.625 level here, which is a good sign again for us. So if we can keep below this level, it'll help rates as well as mortgage-backed securities. So the reason being, mortgage-backed securities and the stocks. So the reason why it could affect stock market is primarily because when you start getting this good high level here, stocks at being such a high level where they're at, it gets to be a little bit more risky, and they might take the higher yields than the risk on the stock market and pull that money out of the stock market and put it into the higher yields in the treasuries here. So just a little caution here. Also, this is kind of helping push the curve against the 2-year and the 10-year, so we don't have that flattened curve. So this is kind of widen that space a little bit. But we do have the Fed raising rates at least 3 times, maybe 4 times this year. So that could easily catch it by towards the end of the year. That's something we also have to watch if we get to a point where we're going to be a flat to negative yield curve, which could translate into a recession later on. So again, those are things we have to watch down the line here. So that pretty much wraps everything up. Hope you guys have a good rest of your day. But if you guys want to get more data, just come over to Twitter. You can find me on Twitter underneath my handle, Mike Bjork. I do post throughout the day. So otherwise, enjoy your day, and we'll look forward to see you guys tomorrow. Thanks again for watching. Bye-bye.